Ready.
Let's call the Business and Governance Committee meeting to order. Are there any non-agenda public comments?
No public comment.
Fantastic. So let's, by the way, before we jump into the action items, I just want to make one just general comment, and it's really to thank all of my committee members. We joke a lot about the time that we spend in these meetings and how it may appear that we race through them, but the only reason we can do that is because everybody in this committee has made the commitment to read the materials. And so for that, I really appreciate that. We may spend just a few minutes in the meeting, but the reality is that there are hours that go into reading the material before that. So thank you to all of you for allowing us to be able to get through this efficiently. All right, action items. First one, staff's recommendation to approve the contract extension with CGI Technologies and Solutions, Inc. for information technology services. David, apparently this is the only time that Greg thinks that sees fit to let you talk today, so go ahead.
Good morning. SDCERS leverages the city's master services agreement for IT application support for its economy of scale and because we have services that are coupled with the city. The current MSA is set to expire in March of 2020, and the city needs additional time to complete the process. The city is extending the current CGI MSA 12 months at the current rates to accommodate their timeline. SDCERS leverages this contract for 4.5 resources, and the contractors are vital to our operations. So we need to extend our agreement for 12 months in order to coincide with the city. So staff recommends that we extend for 12 months.
All right, sure.
Thanks for the report. One quick question I have about the extension is it contingent upon the city extending it? Because my understanding is that hasn't yet gone through the committee and the council process. So I just want to make sure that we're not going to extend and then somehow happens that the city doesn't extend.
It is contingent upon the city MSA, but the city has it set up for its first reading, my understanding, and the second reading is all planned out. There really is not much of an option at this point for the city or SDCERS in order to extend this agreement because we're both wholly dependent upon CGI for our application support.
Thank you for that. But I think to your point, there probably just needs to be a small amendment to the motion to make it contingent upon the city. I think that's appropriate. So,
okay.
Do we need to do that? Do we need to wait for that to happen, or do you want to fix that on the back end, Johnny?
I can do it right now. Contingent upon
the approval by the city, or by the extension by the city of this contract. I don't even need to worry about you because Cynthia's taking care of your job. I love it.
We'll make the motion.
All right. Well done. All right. The motion was moved by Almas, seconded by Lewis. Ready
to vote.
Okay, good. Thanks. All right.
All votes are in.
That motion passes 5-0. All right, David, thank you. Staff's recommendation to approve the disbursement of the annual supplemental benefit and corporate settlement increase payments. Ted, I got to be honest with you, I'm thinking this is less about you speaking and more about the fact that we're paying out more money. What do you think? All right, take the credit. Go ahead.
Good morning, Tanasi and everybody. Staff recommends approval of the annual supplemental benefit payment based upon the calculations as detailed in the report. We have satisfied the muni codes requirement in order to pay that annual supplemental benefit payment, otherwise known as the 13th check.
Okay. Are there any questions from committee members? All right. Then if there are no other questions, can I get a motion to approve the disbursement of the annual supplemental benefit and corporate settlement increase payment?
Ready to vote.
Okay, so Lou moved that, Roberta seconded it, and the motion passes 5-0. Thank you. Ted, thanks. Staff's recommendation to approve the 2020 drop interest crediting rates and to revise board rules 6.10 and 6.40. The big issue for this, as I understand it, is that we're not allowed to tie these to an index, so the board has to vote on this. So it's an administrative issue. Is that correct?
Kind of and kind of not. They are tied to indexes, but the board does have to approve them each year. But there's, in the board rules, it specifically states
That's
what
right.
the indexes
They're not allowed to
are.
automatically float on the index.
Correct.
Got it. Okay. All right. Any questions from anybody on the committee? No. All right. Can I get a motion to approve? Motion by Paul, seconded by Roberta.
Ready to vote.
And that motion passes 5-0. Thank you. All right. Review and renewal of insurance. Johnny? you're up. Do you not feel compelled to go through every single slide?
Oh, well, thank you. Good
Okay,
morning.
good.
It's my privilege to do the annual overview of SDCERS' insurance program, as well as staff and brokers' recommendation to renew your fiduciary insurance and cyber insurance. You all know me. You may not know is James Martinez to my right. He flew in this morning from Colorado. He is with Gallagher Insurance Brokerage. We've been working with Gallagher for just this beginning of this year, and we've been very happy with their expertise. Unlike our former broker, James has lots of experience and expertise in working with public pension systems, representing over 40 public pensions programs. So thank you for coming in this morning.
Thank you for the opportunity.
Let's start real quick. Purpose of the presentation is twofold: to understand what insurance SDCERS has, and as well as to the opportunity to renew your fiduciary and cyber insurance. So the city of San Diego, for which SDCERS was derived from a long time ago, gives insurance coverage for these types of coverage. This relationship that we have with our plan sponsors, pretty standard in the public retirement arena. So the city covers workers' compensation for its employees, which includes SDCERS employees, provides property liability insurance for SDCERS at 401 West A Street here, as well as covers master crime policy.
Do we really have any master criminals, Johnny?
I don't believe so.
Okay.
This is a list of the insurances that SDCERS purchases. Fiduciary insurance of $25 million in coverage, for which James will go in more detail after me. Cyber insurance, this is my mistake, and James, thank you for catching it. We actually have $10 million in coverage, $5 million is our primary, and then James reminded me of $5 million excess. So thank you, James, for that. We have general liability coverage or commercial liability coverage of $2 million. This year, we also purchased non-owned hired auto insurance to help protect the entity in case any of the staff or the board members should get in an accident and cause liability while working for SDCERS. And then we also purchased employment practices liability insurance, something, Thanasi, that you had us look into, and I appreciate that, which covers things such as discrimination claims against SDCERS, its employees, and board. Do you have any questions before we step into the second portion of our presentation to renew insurances?
Any questions from the committee members? Nope. Thank you.
Thank you, James. Then why don't I let you take over and I'll drive for you?
Perfect.
Thank you.
That'd be great. So thank you for the opportunity to be here. And first off, just a little bit of background on Gallagher, since this is the first time that we've been together. Gallagher's a global brokerage that's been around for over 90 years. Public sector and serving the public sector has been a cornerstone of our organization for those 90 years. So, as Johnny mentioned, I personally and our team personally work for, roughly about 50 pension plans across the country. So we're grateful to be here. Gotta get closer to the mic. So the fiduciary liability insurance. A little bit of detail on the coverage and what it does and what it doesn't do. The coverage is really to provide defense costs and damages in the instances that we're legally liable for failing to meet our fiduciary obligations. Johnny wanted us to speak specifically about some of the exclusions that are in the policy, some of the things that it will not cover, the traditional bodily injury, property damage, violations of work comp benefits, things that should go through the work comp system, as well as the important piece of benefits due. So a little bit of background. I think that hopefully that everyone's got a decent idea of what fiduciary insurance does and doesn't do. So the way that the policy is currently structured is that there's 3 layers of insurance that are being purchased. There's a primary layer, which is above SDCERS self-insured retention, or what SDCERS would be obligated to pay prior to the insurance carrier paying. And then we buy an excess insurance policy, and then what's traditionally taken more from the private sector is this Side A, or difference in condition. The DIC stands for that. And really what the policy for the Side A piece does is that it provides excess coverage in the event that we get to a point where we're above $20 million in costs associated with a claim, or it provides kind of a drop-down coverage where it will provide first dollar coverage when the primary insurance policy doesn't respond due to policy exclusions or indemnification provisions that are in the policy. So we've got a busy graph here, but on the left side is the options, or on the left side is actually the expiring policy structure with $10 million that's currently purchased in the green through RLI, which has been a carrier on the account for a while, then Chubb, and then the excess DIC, difference in condition policy, through Hudson. We went out to those same markets this year. We also vetted some alternative markets. The current players that are on the program structure provide the benefit of having some built-up capital. We've paid a lot of premium to these carriers over time, and so in the instance that we do have a claim, as opposed to being an account that's just paid them, $100,000, $200,000 of premium, we have that built-up equity that's with them, which we think from a brokerage perspective provides our clients with the benefits of being a long-term client, as opposed to kind of just someone that's in and out.
Because you've made that statement, could you define the benefits? Because is it going to result in lower fees in the future? Is it going to result in better payment of claims? Because I appreciate the statement, but it was very conclusory, and I'd like to understand it.
Yeah, I think what it does is it provides the benefits of on an individual claim by claim basis. I think that we see that they're more willing to provide benefits to the insured in gray areas that may not be specifically within the policy form. We also see that built up of equity helps us with those renewal results that we see in the future in terms of price increases. We're able to see, in this case, some moderate flattening of prices, where some of our accounts across the country are seeing significant increases on their fiduciary liability insurance when they're with a new carrier, they move coverage, those types of things.
And I appreciate that on the second one. On the first part, though, is there any metrics or data on that to support the payment of claims in the gray area?
I'll look into it.
All right. The reason I'm saying that is because when you're talking to the board that's supposed to vote on this issue, I want to make sure that the board is making decisions based on something that they can state their hand, that they actually can count on. Because I'm not aware of any data in that area, but that's not what I do. Mm-hmm. I'm perfectly fine if you tell me, hey, we talked to these other carriers, and we're seeing our other clients get a higher increase than you're getting because you're staying with your existing carriers. That's great. That's something that's supportable. That's no problem. If it's not supportable, I want to make sure we're really clear to differentiate those, so that the committee and the board isn't making a decision on something that's not factually supported.
Yeah, and I think a factual example being that in going to RLI was interested or able to provide a $500,000 retention, $1 million retention, and a $2 million retention to price out. When we go and talk to other carriers and they look at the risk on a first-time basis, $2 million is a starting point in terms of retention, and they're not willing to come down lower than that.
Great. Okay. I appreciate that. Thank you for clarifying.
Absolutely. So left side being the expiring policy, $211,000 in premium. $2 million is the retention. That retention has been a moving piece over time, I believe. Looking back, I think it was in 2016, that was $1.5 million, and that was increased at that point in time. We did go to RLI and ask them to provide some options with lowering that retention just to see what the trade-off in dollars would be. Decreasing the retention or having the insurance step in sooner, $1 million sooner, results in a cost of about $35,000. But really where we wanted to spend our time was focusing on restructuring the excess to try to figure out if there was a way with Chubb and with Hudson, if we could reshuffle the deck up top to provide the same amount of insurance, still $25 million, but increasing Hudson's participation and decreasing Chubb's to provide some savings over the renewal options that were out there. So alternative two is the option that I think that staff is recommending and we are recommending as well. And what that's doing is Hudson is participating more on the upper layer, and Chubb is decreasing its percentage participation, but the total limits of $25 million are still there. Hudson, Chubb, and RLI, all their ratings are A or better. So financial rating of A or better. This is rated by AM Best, not S&P or Fitch. And then the size is XV, and XI. Those represent financial surplus that's available for the payout of claims. And it ranges from 1 to 15, so 15 being the largest. Any questions on the fiduciary?
At the end of James and my presentation, we'd like the committee to take a vote on both insurances together, if that's all right. Great, so we'll continue with the cyber insurance. Thank you, James.
So cyber insurance or network security insurance, depending on how you look at it, it's a hybrid of an insurance product in that it provides first party costs or reimbursement, as well as third party in the event of liability or notification costs that may be associated with it. So it's the cost to investigate potential breaches, to restore our data, to remediate some sort of security issues, and to provide business interruption and coverage in the event that we had those. And then on the flip side, the third party being the notification, the credit monitoring that you see from some of the big box stores that have had breaches in the past, as well as the liability pieces that may arise from it, from lawsuits. We typically think that your ability to control the first party costs and the notification and response from the get-go mitigate lawsuits in the end. Insurance carriers will tell you that probably 75% of their costs that they pay for cyber incidents are for breach forensic costs associated with non-incidents. So those are ones where they think that something happened, but it wasn't actually a claim, but they're providing those that forensic detail to dive into it to at least help insureds determine if there was something that took place. And then
Cyber extortion, ransom, payment of ransom?
Ransomware, exactly. And the cyber extortion piece, I think that insurance carriers would love to help you unlock your systems prior to paying. However, they do also, and the policy does have the ability to respond to payment of that ransomware. Yeah. So the way that the policy is currently structured is we have the coverage modules that are the insuring agreements of the policy form. We have $10 million in the aggregate, and we have $10 million for each of those specific coverages. So in the event that we incurred $10 million of cyber extortion loss, we wouldn't have $10 million. We wouldn't have any money left or any policy limits left for the third-party liability piece. But the way that this was changed over the prior policy is that there was sublimited buckets associated with some of the first-party costs, and we've modified that to give us kind of the whole policy limit associated for each of those or for any of those buckets that may arise. And $2,500 being the policy retention or what's retained by SDCERS. The policy provides pretty much its preferred costs to data breach forensics, data breach coaches or law firms to maintain attorney-client privilege, and resources that are there on a preferred cost basis from the insurance carrier, so that in the event of a breach, we're not scrambling trying to find a carrier or a partner that's out there and trying to develop a contract while we're thinking that a breach happened in the past. So the renewal option is the same as the expiring option, same costs associated with it, less than $10,000 for the coverage. And with this, it says taxes and fees do not apply. If you look at the next slide, 3.2% surplus lines, taxes and fees apply. This is a coverage that's through Lloyd's of London. It's on non-admitted paper, and what that means is that the policy form is not filed with the state. These policy forms are changing day by day, week by week. New carriers are coming out with new policy forms, and the ability to adapt those policy forms every renewal process without having to go through the state filing process we think makes it a better product for our clients and more adaptive to them.
Is there any downside to not
You don't get the benefit of the state regulator reviewing it. You can answer a question. I'm sorry. Go ahead.
Yeah, that's a great point. Yeah, so the downside would be that, and so we have the financial rating and the size of the organization on top. If the rating was less than B or kind of subpar rating, or the financial size wasn't there, and it was an insurance company that we expected to pay $10 million on our behalf, but they didn't have $10 million in the bank, we could have some concerns about the financial stability of them. Lloyd's of London, the syndicates in Lloyd's of London, they all pool together and pool their resources together, the ratings quality and the financial size of its quality in terms of their ability to pay out claims. So we think that those two offset the requirement to file with the state.
I don't know that it would be fair to say that it offsets it, but what it means is that we don't have the regulators looking at it and saying, yes, we think that they've complied. So they could be completely non-compliant. They may not actually have the reserves. We wouldn't know about that. But what I think we're hearing is that we're willing to take that risk because the rating agencies say, hey, they got a lot of money in retention and they seem to be a quality company that's paid their debts.
Well, in the state regulator piece is that it's a filing of their form, and it's a filing of that the coverage and the rating that they use to rate the policy. So it's rated based off sales or those sort of things, where it's a filed rating with the state as opposed to the quality of the organization. So you may have Travelers, where they may have some policies that are admitted with the state of California and some policies that aren't, just depending on the types of insurance that are associated and the flexibility that they need on each policy form.
Unless there's any other questions, that concludes our presentation, and then we'd like a motion.
I have a question about the employment practices.
Yes.
So there's only $1 million of coverage?
Yes.
Is that for fees and damages?
Yes. And we've looked into that, and I've talked extensively with James about what should be the coverage amount. And given our claims history, which is zero for
Right.
many, many years, the amount of coverage seems appropriate.
So thank you for asking a question, because that was my question. So what you're saying is defense costs and liability are coming out of that same $1 million bucket.
Yes, defense erodes the limit.
Okay, so my question becomes, what was the policy premium on that policy if you added defense costs in a separate bucket? Because that, to me, makes more sense to at least understand the cost.
Yep.
I mean, that covers about one claim, $1 million
It may not, yeah, exactly. It could, depending on,
with fees.
one Christmas party and a little handsiness, that money goes quick.
So a $3 million policy was $32,000 in premium, so that additional $2 million was $15,000 more.
And is there a $2 million option?
We did not. We looked at a $3 million option and a $5 million option. We did 1, 3, and 5.
I'm just asking, is there a $2 million
Yes.
option? It would be nice if we had that information for the full board tomorrow.
Well, the employment practice liability insurance has been purchased and isn't up for renewal right now, but what we can do, Thanasi, and doesn't take a vote of the board since it's within Greg's limits, we can look at $2 million, discuss it with you if you'd like, and then find the premium and determine a staff level whether or not that's a prudent purchase.
I don't have an issue with, I totally understand it falls under Greg's limits. I think it would be appropriate for the committee to make whatever comments it wants to, whatever recommendation it wants to give Greg. Whether we do it now or we do it next meeting, I don't care, but I think that our carrier should, bring back the information so we know what's available and what the costs are. But I gotta tell you, $15,000 difference, my own personal opinion, I'd probably buy it because I don't think it's, your defense costs, not for a public entity paying for this stuff, you're running $350,000 per side for defense costs. When the city's on the hook paying for this stuff, it's going to be more. So you got $1 million policy, there ain't a lot for claims left. And I get that we haven't had any history of it, but that's sheer dumb luck. The reality is statistically, it's going to get hit eventually. I hope not, but statistically, it's going to get hit at some point.
So I like the idea of bringing up at a future meeting the employment practices and liability insurance, so we can bring that back to the committee to kind of explore that further and talk about it and see what our options are available.
Will do. Are there any other comments before we move to a vote? CJ, would you bring up the vote, please?
Don't rush her.
Take your time.
All right, can I get a motion to renew the fiduciary and cyber insurance as recommended by the broker and staff? Anybody?
Got one.
Thank you, Almas. Can I get a second? And Roberta, thank you.
Ready to vote?
And
All votes are in.
that motion passes apparently begrudgingly 5-0. So, but it is unanimous. All right. All right. Next, we have staff's recommendation to direct staff to issue an RFP for commercial real estate broker services. I did have one comment for staff. I've never seen on the B&G committee meeting an action item to hire a move consultant. And since the building is going to be moving us, the move consultants save a ton of money in the organization of it to make sure that we actually have covered all of this. There are people that do nothing but literally deal with the logistics of it. So it'd be my recommendation is that you guys go look at it. It'll fall well within your limits, but I'm just saying it makes a huge difference in how fast it happens, how effectively it happens, and then they usually pick up things that we just don't think about. So for whatever that's worth. But getting back to the item here, are there any questions by committee? Nope. Okay, then can I get a motion to direct staff to issue the RFP for commercial real estate broker services? Moved by Paul, seconded by Lou.
Ready to
And
vote?
that motion passes 5-0. Thank you. All right. Review of Division 5 of the Board Rules, Retirement Benefits, Closed Session Disability Hearings Policy, and Closed Session Policy and Recommended Changes. This is mostly administrative, and it looked like most of the changes were fairly innocuous. Are there any questions by committee members? All right. Hearing none, can I get a motion to adopt staff's recommendation to changes to Division 5 of the Board Rules and the rest of the motion?
Ready to vote?
Okay. Moved by Lou, seconded by Roberta, and that motion passes 5-0. There's no information items, so we're going to move on to reports. Cynthia Queen, Member Services Division Report. By the way, people, when you're looking at those charts on that call time, those are not minutes, those are seconds. They're averaging under 30 seconds a call. God bless you. It's too bad not all of the departments can be as efficient as you are, Cynthia.
Thank you. It's lovely to see you all this morning. For my report today, I'd like to highlight the annual meeting, which SDCERS held last month. Each year, we present a comprehensive and fresh new presentation for our members because we are committed to transparency and proactive education. I would like to again thank our Board Vice President, Karina Coleman, who was our keynote speaker and emphasized to the audience the board's commitment to keeping a solid and secure plan for everyone's future. Greatly appreciated. At our presentation, of course, we emphasized our investment excellence, our data privacy, plan funding, a historical look at pensions over the last 100 years, and pension reform, my favorite topic. We also encouraged our members to utilize our member portal and all the tools that are available there. The team spends a great deal of time preparing and practicing for this meeting and puts a lot of effort into it. And of course, we want to show off our excellent public speaking skills. So I could sit here and tell you that we did an absolutely great job, and that would be true. But I do have a third-party endorsement. We send out 20,000 invitations to the entire membership for this, and because we have done such a good job with the board's leadership of building a very strong pension system, each year we get lesser attendance because everyone is just so happy with the work that we are doing. Still disappointing because of all the practice that we put into it. However, we do have a fine number of actively employed members, people from all three plan sponsors, and retirees and deferred members. Had the pleasure of running into one of the current city employees who attended the meeting, who was in our office, and stopped me to say how impressed he was with all of the presentations, and he wondered why there weren't thousands of people there, because why wouldn't everyone want to hear all of this information? So I got a new plan for next year's advertising. We'll need a bigger room, and everyone did a really great job, and I'd like to thank you all for the commitment to sharing the important work that we do with all of our members. Thank you, and if you have any questions, I'd be happy to answer them.
Any questions? Hearing none. Thank you very much, Cynthia.
Thank you, and a video of the presentation is available on our website. Thank you.
All right. Benefits Administration Division Report. Marcel.
Good morning. So there are two things I wanted to highlight in the report. One is we received the PPCC award for the second time. There are two parts to that. One is on administration and one is on funding. So happy to say that we did receive that again. The other part that I wanted to talk about, if you go through my report, there was a lot of training and presentations that were going on in the last couple months. And one of the ones that I wanted to highlight was on SDCERS core values. So if you recall, at the February retreat, the board codified SDCERS core values. Following that, at our May management team meeting, which is about a third of our staff, we discussed how do we bring those to life in the organization on a day-to-day basis. And there were a number of ideas that were thrown out and a number of things that we're working on, but one of the ones I really enjoyed was to do presentations. So we've already had 2 presentations that have happened. Victoria Fedeliso and Jessica Maloney presented on the core value of fiduciary. So that is at an all SERS meeting, all of our staff meeting together in this room. And then Jamie Hamrick and Anders Norman presented on the core value of transparency. So coming up in December, we're going to have Integrity by Rich and Rebecca from Finance. In February, we'll have Customer Service by Michelle from IT. In April, Accountability by Monty from Benefits Administration. And then in June, Professionalism by Susan and Melanie from our attorneys. So very happy that those are moving along, and they have been very entertaining and informative presentations. We've given staff license to however you want to present it, so it's been very good. And with that, I'm happy to answer any questions you may have.
Any questions? All right. Thank you, Marcel. David, you've not been yellowed out. You can't speak on this one. So, but I will ask the committee, does anybody have any questions about David Bond's Information Technology Division report? Hearing none, I'm going to move on to Johnny Trans. You didn't get a yellow mention here either. You don't get to speak. So does anybody have any questions on the Legal and Compliance Division reports prepared by Johnny? All right. Hearing none. Ted.
You sounded surprised.
No, not at all. Actually, what I'm surprised about is why we just didn't do this one when we did your last one. That's what I'm really surprised at.
I know, I was expecting you to pull an audible on me.
Yeah.
So if you remember at the last September B&G committee and audit committee, I presented a matter to those committees explaining that we had an administrative filing issue with the California EDD and that I would keep you apprised of the results. I'm happy to present that matter is now closed with no penalties or interest assessed to SDCERS.
That's fantastic. Any questions for anybody of David? I mean, of Ted? Good Lord. Sorry. All right. Thank you, Ted.
Thank you.
All right. And then, Ted, I guess you're not allowed to talk about the August 2019 Trust Financial Services financial statements, but does anybody on the committee have any questions for Ted about that? Nope. I guess my question is, what did you do wrong that we made $100 million less this year than we did the previous year? And don't try and blame it on Liza's team. I don't want to go there. No, I'm kidding. All right. Thank you very much. I appreciate the report. Any questions or comments from anybody on the committee or staff? Does staff have any comments? Okay. All right. Then I just want to close by saying a couple things. First of all, thank you to all the staff. You guys do a great job. There's a lot of work that goes in those reports. It's very helpful. The nice part is when I get to the end of the report and I don't actually have any questions, that's how I know you guys did a great job. So thank you very, very much. If there's nothing else, can I get a motion to adjourn? All right. Moved by Almas, and we're gone. Thank you.